Welcome to Asia Granny Bites, Thematic Stock Plays in China and Beyond on the PiranhaProphet YouTube channel. I'm Mr. Piranha, joined by Ms. Prophet.
We're here to bring you actionable insights for retail investors, adapting Fundstrat GRNY themes to high-growth Asia markets. Every Wednesday at 2:01 p.m. UTC, 10:01 a.m. ET, 7:01 a.m. PT, 15 to 20 minutes, or 2025 for this premiere.
This is for entertainment only, not financial advice. Invest at your own risk. Past performance isn't a guarantee. Do your research and consult a professional. Full disclaimers, including no liability and subscription details, are in the description.
Let's dive into the markets. Trade smart, piranhas.
Welcome to the kickoff episode of Asia Granny Bites. Excited to dive into thematic stock plays in China and beyond, focusing on high-growth opportunities in volatile markets.
I'm pumped. Absolutely. And curious. So, we're really zooming in on some very specific criteria here. Consistent profit margins above 10%, revenue growth over several quarters, and undervaluation by DCF analysis, right?
Exactly. It's like a laser-focused approach. We take themes originally developed by the Fundstrat GRNY ETF and adapt them innovatively to the dynamic China and Asia markets.
Wow, that's ambitious. And these themes, style tilt, seasonality, PMI recovery, energy/cybersecurity, millennials, global labor suppliers, and easing financial conditions, sound like they cover just about everything.
Yep, absolutely. It's like, if you mix tactical plays with cyclical trends and long-term sustainability needs, you've got a recipe for some really interesting stock plays.
And we're not just talking about a one-size-fits-all approach. There's a robust structure, right? I mean, we have the macro news update, the Piranha Picks segment, and then a deep dive fundamental and technical weightage rating.
Right? Exactly. Each episode is split into 3 segments. First, we get the broader market view from Asia, things like China's GDP forecast upgrades, and some challenges from U.S. tariffs hitting export-heavy economies. Then, we move into the picks.
Speaking of the macro news update, what were the big economic headlines from early October 2025 again?
So, here's the scoop. The World Bank bumped up China's 2025 GDP forecast to 4.8%, but there's a projected dip in 2026 to about 4.2% due to weakening demand and external pressures. Meanwhile, the ASEAN +3 Research Office is warning Asian economies might stumble under the weight of U.S. tariffs.
That's worrisome. But then you mentioned China's new economy sectors. What's driving that growth despite the headwinds?
Yes, it's pretty fascinating. The new economy sectors, listening to the PBOC stimulus measures like RRR cuts and rate reductions, they're boosting liquidity and giving these sectors, like tech and AI, a run for their money.
Yep, very interesting. I mean, it's like watching a sports team surge when the coach calls an unexpected play, right?
Exactly. And then there's the counterpoint, risks, like Japan's current wage issues and tech weakness in Hong Kong, which paint a more complicated picture across Asia.
Speaking of paints and pictures, let's move to the Piranha Pick. I know we're spotlighting 2 stocks, one from China and one from Asia, excluding China. How do they tie into our core themes?
Sure thing. First up, from China, we have Cambricon Technologies, 688256SS. It fits our global labor suppliers theme, driven by its AI chips that power automation. Plus, it benefits from easing financial conditions thanks to stimulus measures.
Right. Cambricon closed at 175 renminbi by October 8, 2025, with a staggering 150% YTD spike on AI demand and revenue growth that blew past the roof at 4,425% YoY in Q2.
It's almost unreal. It's like they're in a whole different stratosphere with an average Q2 growth of over 1,000% across 3 quarters. And a healthy 27.96% profit margin.
And then, on the Asia excluding China front, there's United Microelectronics, UMC in Taiwan, right? Tied to the PMI Recovery theme?
Right, exactly. UMC is riding the wave of semiconductor manufacturing rebound and is also benefiting from easing financial conditions. It closed at 150 Taiwan dollars on October 8th, up 10% YTD, with solid revenue growth and a robust gross margin of 28.7%.
Now, those are some impressive fundamentals. But I'm curious, don't you think focusing strictly on these criteria might, overlook some emerging market nuances? I mean, what about companies that might be undervalued for a reason?
Great point, and I get where you're coming from. But the idea here is that our criteria, consistent profit margins, multiple quarters of revenue growth, and DCF undervaluation, serve as safeguards. It's like, if a stock fits all these boxes, the fundamental risk is somewhat mitigated, even in volatile markets.
Yeah, sure, got it. But I'd still say it's a tightrope walk between capturing high growth and avoiding value traps, especially when political risks come into play.
For sure, and that's why, for Cambricon, even though the fundamentals and technical behind it are stellar, a total Piranha rating of 9 out of 10, we do recommend a conservative position sizing, like less than or equal to 5%, given the high political risk in China's AI sector.
Right. It's a balance. Now, the ratings. Can you break down that fundamental and technical weightage rating for Cambricon?
Absolutely. On the fundamental side, revenue growth hitting 4,425% year-over-year in Q2 with an average over 1,000% for 3 consecutive quarters gets a perfect 10. Their profit margin of almost 28% is another 10. Add in moderate debt levels and strong ROE, and you get an average fundamental score of about 8.86 out of 10.
Yep. And on the technical side? I heard the momentum is just as impressive.
Right. Technically speaking, the 20-day and 40-day moving averages are below the current price. RSI is around 65, signaling healthy momentum. Support is at RMB 170, resistance at RMB 190, and even the Fibonacci levels are well positioned. So, we're looking at a technical score of, roughly 9 out of 10.
That makes the total rating a prime 9 out of 10. Very compelling for traders looking for thematic plays.
Exactly. And for UMC, though we leave the detailed breakdown for our paid members, we're expecting a rating around 8 out of 10 or above, factoring in medium political influences from Taiwan's backdrop.
It's amazing how both picks, despite operating in different parts of Asia, align with our overarching roadmap. So, let's talk a bit about the episode structure. Each week we drop new episodes, right?
Yup, every Wednesday at 10:01 a.m. Asia time, starting October 15th, 2025. Each episode runs for about 15 to 20 minutes, neatly split into our macro news update, the Piranha Picks segment, and then our fundamental and technical breakdown.
Right, clear and precise. And don't forget the bonus episodes, quarterly on the first Friday of each quarter. That extra layer for annual recaps and deeper insights is really something special for the dedicated investors out there.
Absolutely. It's like, the main show gives you your weekly scoop, while the bonus episodes bring that deep dive flavor, almost like the director's cut for stock enthusiasts.
Yep, I love that analogy. Now, while both of these segments are super informative, I wonder how new retail investors might react to the seemingly technical language around DCF undervaluation and moving averages. Do you worry it might scare off some of them?
Well, it's a valid concern, but our approach is very structured. We break it down step by step, ensuring that while the metrics are technical, they're explained in accessible terms. Plus, our full pick lists and ratings cater to both novices and more experienced investors.
Yeah, that makes sense. That's reassuring. And the thematic edge of targeting stocks with consistent profit margins, robust revenue, and undervaluation by at least 20% really gives us a reliable filtered list.
Exactly. It's all about playing smart in these volatile markets. The themes effectively filter out noise and focus on stocks that have been consistently outperforming despite market fluctuations.
And the mix of tactical plays like style tilt with the more strategic long-term plays like energy/cybersecurity creates a well-rounded portfolio approach, doesn't it?
Oh, absolutely. It's like, you're crafting a toolkit where each tool is designed for a specific market condition.
Yeah.
And that's what gives our strategy an edge, especially in the unpredictable environments of China and broader Asia.
I'm really impressed by how detailed and data-driven this approach is. It gives retail investors a clear picture of not just what to buy, but why.
Right. And that clarity is what we aim for. We want our audience to trade smart, to understand the interlinkages between economic trends, market signals, and the underlying company fundamentals.
Totally. Before we sign off, any final thoughts for new listeners eager to jump into these thematic plays?
Just one thing: stay informed and keep learning. Every episode offers actionable insights that combine the macro picture with specific stock picks based on stringent criteria. And remember, risk management matters big time, especially in these volatile markets.
Absolutely. Well, thanks for breaking it down. I'm really looking forward to the next episode on Style Tilt Surge and all the insights it promises.
Thanks for tuning in, everyone. Hit like, subscribe, and turn on notifications for more dumb money wins. Trade smart, stay sharp, and catch us next Wednesday.